Good afternoon, everyone. I was glad to hear that strong, good feeling after lunch. It's fantastic to be here with all of you and to be back in Hong Kong again and to witness again firsthand the amazing vibrancy and resilience of this wonderful part of the world. So a very big thank you to Stephen and to Clement for inviting me to speak to you today, and also actually the opportunity to spend some time at the Insurance Authority yesterday and to meet so many of your impressive and committed team as well. So I think the terms vibrance and resilience and also the terms sustainability are very well reflected in today's program, and also I think are real hallmarks of the Hong Kong insurance market. And I want to talk today about how, from a supervisory perspective, resilience really needs to be a more important focus than ever in the current global economic environment, and how the key themes of taking advantage of innovation while also relentlessly pursuing sustainability are also a core focus of the global insurance supervisory community at the level of the International Association of Insurance Supervisors, the IAIS. So we already heard in this morning's panel on global financial markets how we find ourselves in what increasingly looks like a multi-crisis world, be it the global pandemic, the war in Europe, or the threat from climate change and natural catastrophes. We also know that insurance has a central role to play in helping to manage these risks and in supporting societies as they grapple with these challenges. And I would like to add, importantly, that supervisors have a role to play in helping to facilitate this action. Now, it's actually only recently that I've been able to make this last statement quite so unequivocally. For some time, insurance supervisors grappled with the question of whether their supervisory mandates empowered them to take actions that were not only focused on the stability and the soundness of the insurance sector itself, but also to take actions that were focused on helping the insurance sector to play the role that it needs to play in tackling societal challenges and building resilience. I believe that we've decisively turned a corner in that debate, and I say so because last month the IAIS published a report entitled "A Call to Action: The Role of Insurance Supervisors in Addressing Natural Catastrophe Protection Gaps." The report outlines 5 major areas of supervisory activity that can contribute to addressing Nat Cat protection gaps, supported by case studies from jurisdictions spanning across all IAIS regions. Importantly, the report sets out that all supervisors have a strong basis for taking action to help narrow Nat Cat protection gaps, regardless of their mandate, given the potential impact that protection gaps have on financial stability, policyholder protection, and financial inclusion objectives. Of course, for those supervisors that have mandates to promote financial inclusion and market development, actions to address protection gaps and resilience are particularly critical, which is why I was very pleased to hear yesterday that insurance market development has been added as a supervisory objective of the Insurance Authority in Hong Kong, and that capacity has already been added to promote and pursue this objective within the authority's team. It speaks directly to the theme of supervisors playing an active role in finding solutions to today's societal resilience and protection challenges. Interestingly, this was also a key theme of our IAIS annual conference in Tokyo not that long ago, last month. And it was particularly pleasing for me to hear this reflected in the opening remarks to the conference that were provided by the Prime Minister of Japan, also in his capacity as President of the G7 this year. He spoke directly to how the insurance sector needs to be front and center in helping to tackle societal challenges, such as climate change and disaster resilience. But he also spoke about how, in order for insurance to fully perform its role, it is critical that insurers maintain their financial soundness, sophisticated governance and risk management, and the trust of consumers, and how, accordingly, the role of effective regulation and supervision is critical. Lastly, he touched on how it is becoming increasingly important that the public and private sectors take action in a collaborative manner to solve these societal challenges. And this is exactly what the IAIS has been focused on. In order to address these common global challenges, supervisors around the world need to find global solutions, and to do so in a collective and collaborative manner. And I think the IAIS provides a vital platform in this regard for these collaborative efforts. We've set out clearly that we want this report that we published earlier last month to be a catalyst to facilitate discussions among insurance supervisors, the insurance industry, policymakers, and other relevant stakeholders on how to narrow protection gaps, focusing firstly on natural catastrophe protection gaps, but also extending these discussions to other areas of protection gaps over time, cyber, health, for instance. And we've already taken a first step, announcing our intention to develop a joint work program with the Global Shield Against Climate Risk and our implementation partner, the Access to Insurance Initiative, to strengthen the resilience of countries vulnerable to climate change. So I very much look forward to these conversations that we'll be having collectively, collaboratively, going forward on how we can find these joint solutions. I also want to take a moment to briefly touch on this theme of climate change, given the welcome focus of this forum also on sustainability issues, and in particular because of the impact that climate change is already having in the Asian region. As average global temperatures continue to rise, we don't know when certain tipping points will be reached, but we do know as supervisors that we need to stand ready to address the consequences for insurers' solvency and for policyholder outcomes if they are reached, and whether it is through direct balance sheet impacts or the likely macroeconomic impacts, we need to be ready. Which is why I am pleased that the IAIS's work in this area continues to go from strength to strength. So, as Rahman mentioned, we're refining our data gathering on climate risk, which also informs our Global Insurance Market Report that was published just a couple of days ago. And we're undertaking a series of consultations on how to adequately integrate climate-related risks into our global standards. And we are continuing to support our members in their efforts through knowledge sharing and capacity building, including on evolving topics such as climate risk scenario analysis, transition planning, and sustainability disclosure. So the very next panel after my remarks is on the broader topic of ESG, but also on diversity, equity, and inclusion, and how they can generate business value. So let me add a global supervisory perspective on this topic. In November 2021, the IAIS published a statement on the importance of DEI considerations in insurance supervision, pointing out that advancing DE&I within insurers' organizations and business models supports sound prudential and consumer outcomes and sustainability objectives. Since then, we've been actively supporting our members to advance DE&I within the insurance sector. We've published a stocktake of progress in this regard, and we're busy finalizing 2 supervisory guidance papers. One on the link between DE&I in the leadership and workforce of an insurer and its governance, risk management, and corporate culture, and the other on how DE&I considerations are integrated into insurers' conduct of business and how the supervision of this may result in fairer treatment of consumers, recognizing diversity in the customer base. I'm happy to say we're also walking the talk in this regard in our own operations as a global membership association. We're committed to strengthening and prioritizing our own approach to DE&I so that we can create an environment where every one of our members feels a sense of belonging and of their views being respected and valued. Lastly, let me talk briefly about the IAIS's work on maximizing the benefits of technological innovation for consumer outcomes, for financial inclusion, while being mindful of the risks that some of these trends may introduce. Digital solutions are being deployed across the insurance value chain, transforming how insurers operate and interact with consumers. Seamless digital processes can help improve overall customer experiences, and the greater availability of data, coupled with advanced data analytic capabilities, could really enable insurers to offer inclusive solutions which meet the diverse needs and risk profiles of consumers from all walks of life. And one technological advancement that is top of mind these days is, of course, on the adoption of artificial intelligence and machine learning, or AI/ML, ChatGPT, etc. And our work on financial inclusion in particular emphasizes the opportunities that could arise from advancements in this space, although I think progress in this regard has yet to be fully realized. And there is a big potential there still for extending that protection from beyond the middle class to groups that have previously been underserved. Our work also naturally focuses on the possible prudential and market conduct risks. We've just completed a thematic review to take stock of supervisory guidance on AI/ML across a dozen jurisdictions, particularly looking into the area of model risk management. We've published a short summary of this work on our website actually yesterday, and we will be developing a supervisory guidance paper on this topic next year. So those are some of our key themes going forward. But before I conclude, I think it would be remiss not to mention, of course, also 2 other core activities of the IAIS that will continue to be a focus in 2024. Firstly, the IAIS's macro-prudential activities and the annual global monitoring exercise that we heard a bit about this morning. And secondly, the finalization of the Global Insurance Capital Standard, or ICS. On the first, as Raman pointed out, the GME provides an incredibly important empirical basis that covers more than 90% of the global insurance market to analyze insurance market trends and risks at a global level and therefore is an incredibly useful complement to national authorities' macroprudential supervision. So thank you. I want to say thank you to all of you in the room and online, both insurers and supervisory authorities from this region who continue to contribute to this important area of the IAIS's work. And next year we will continue, in particular, as we heard, to focus on liquidity risk, credit risk in the face of the challenging macroeconomic environment, and structural shifts in the life insurance sector. The GME is also part of the IAIS's broader efforts to significantly increase our focus on macroprudential risks and enhance macroprudential supervision amongst our members. The IAIS this is encompassed in the IAIS's holistic framework for assessing and mitigating systemic risk in the insurance sector. It also includes a set of macroprudential supervisory policy measures to help address potential systemic risks before they become a problem, as well as robust implementation assessment activities. And I want to mention the assessment activities because in April this year we published a report on a targeted jurisdictional assessment in 10 major insurance markets around the world, which included Hong Kong. And overall, the TGA results demonstrate actually strong implementation of the holistic framework standards, which is a very good sign. It means over recent years, insurance authorities in these 10 markets and others around the world have made great strides in improving their macroprudential supervision, while pointing out there are some areas that warrant further attention, such as recovery and resolution planning. But I also want to congratulate Hong Kong, which, as I say, was one of the participating jurisdictions in this exercise, and certainly the exercise pointed to the significant progress that has been made in recent years on the implementation of macroprudential supervisory measures in this market. So congratulations, Clement and team. The other critical milestone for 2024 is the delivery of the final Global Insurance Capital Standard, or ICS. In fact, with 362 days to go until adoption in Cape Town on the 5th of December next year. Already in June this year, we had a consultation on the candidate ICS as a prescribed capital requirement, which is a key milestone in finalizing the global standard. Our journey to the adoption of ICS has been a long one, and next year we'll see the culmination of a 13-year journey marked by extensive data collection and analysis, broad participation from supervisors and insurance groups from around the world, and rigorous consultation. It will create, for the first time, a common language for the supervisory discussions of the solvency positions of internationally active insurance groups. And now the conversation is very much turning to implementation issues from 2025 onwards, including transition arrangements. So we're grateful to not only the insurance authority here in Hong Kong, but also all of the internationally active insurance groups in this market who have been active participants throughout this long journey, and for also your commitment to implementation of the ICS once finalized. So let me conclude, and I hope my remarks today have given you a flavor of the trends and priorities for the global insurance supervisory community. Global collaboration is vital to our work. So again, a big thank you to Stephen, to Clement, and the Insurance Authority team for being such an important voice from the Asian region in our work and showing leadership on that. And also to the theme of today's event, the global supervisory community stands very much ready to be part of finding these joint solutions to today's critical challenges around societal resilience. Thank you very much.